All right, hey everyone, welcome back. I bet you're eager to get your Singapore market update right. We're going to dive right in, no time to waste. Today we're looking at three big players, UOB, Capitaland Investment, and we got to talk about it, the Monetary Authority of Singapore,
Yeah.
or MAS.
The MAS.
Yeah, we'll make it interesting, promise. We've got some leadership shakeups, big acquisitions, and maybe some market shifts ahead.
Juicy.
It is. So let's start with UOB. Big news. Their CFO, Lee Wai-fei, is retiring.
Wow, yeah.
He's been there for 20 years.
20 years. That's a long time, especially in finance.
Right. That's a whole career for some people. So what do you make of this? Big signal for investors, right?
Definitely something to watch. It speaks to stability, 20 years at the helm. And they're promoting from within. Liang is stepping up. He was head of group corporate banking.
So continuity?
Could be. Might signal they're sticking with their current strategy.
Interesting. But here's a little detail. Edmund Liang, the new head of group corporate banking, he comes from a capital markets background.
Oh, that's interesting.
Right. Does that tell us anything about UOB's future direction?
It might. Capital markets, you're thinking more investment banking, maybe wealth management.
Exactly. So could this be a shift for UOB? A bit riskier, maybe?
Possibly. Could change the revenue streams, too. Attract new investors. Maybe even alienate some who liked the conservative approach.
Makes sense. It's a lot for UOB investors to think about.
Yeah, a lot to unpack.
And by the way, UOB's stock,
Uh,
little bump before the news, up 0.3% to close at $37.35.
Keep an eye on that. See how the market reacts over the next few weeks. This leadership change, it's going to take some time to really see what it means.
Okay, let's move on to Capitaland Investment, CLI. They just pulled off a major move. Acquired the property and corporate credit investment management arm of Australia's, you ready for this? Wingate Group.
Win it.
Yep, down under. And it wasn't cheap. A den $200 million. That's about 173 million Singapore dollars. Plus, get this, there's a performance-based payout over the next 3 years.
Performance-based. Wow, they must be pretty confident about their prospects.
That's what I was thinking. Why are they so bullish on Australia?
Well, CLI, they're all about growing their assets under management. This acquisition, it boosts them to a whopping $115 billion. That puts them in a whole other league.
115 billion. That's a game changer, isn't it?
Definitely puts them on the map. Serious player in real estate investment now.
But is the Australian market the right bet right now? There's been a lot of talk about a potential property bubble over there.
There is that risk, no doubt about it. But CLI, they're not fools. They know what they're doing. This acquisition, maybe they see value where others are hesitant.
Makes you wonder. Especially since CLI's stock didn't really move on Friday, ended flat at $2.65.
The market's in wait-and-see mode. It'll be interesting to see how this plays out.
Right. Now let's talk about the big one. The Monetary Authority of Singapore, or MAS. Everyone's on the edge of their seats waiting to see what they'll do.
The MAS, yeah, they're kind of like the puppet masters of the Singapore market, aren't they?
That's one way to put it. Will they ease monetary policy in early 2025? That's the question.
Big question. And it impacts everybody, from the biggest corporations down to everyday folks.
Exactly. But hold on, for folks who might not be finance experts, can you quickly explain what monetary policy easing even means? Why is everyone so obsessed with it?
Sure, no problem. Imagine the MAS is like the conductor of an orchestra. They control the flow of money in the economy. When they ease monetary policy, they're basically making it easier for businesses and people to borrow money.
So lower interest rates.
Exactly. Lower interest rates make it cheaper to borrow, which encourages spending and investment. The goal is to stimulate the economy and keep things growing.
Ah, I get it. So why not just ease all the time?
Well, there's a catch. Easing can also lead to inflation. Too much easing and prices start going up, up, up.
So it's a tightrope walk. The MAS has got to find that sweet spot.
Precisely. Right now, it looks like they might be leaning towards holding steady, keeping things as they are.
Yeah, that's the buzz.
Why do you think that is? Couple of reasons. First off, inflation in Singapore is a bit hotter than they expected. Core CPI was 2.8% in September, higher than their forecasts.
So easing now would just pour fuel on the fire, huh?
Exactly. They don't want to risk making inflation even worse.
Makes sense. What else is the MAS worried about?
The other big factor is the 2025 U.S. presidential election. Uncertainty there, right? Who's going to win?
Yeah.
What will their economic policies be? The MAS is waiting to see how things shake out before making any big moves, especially with the possibility of, let's just say, unpredictable candidates like Donald Trump potentially coming back into the picture.
Oh, yeah, that would definitely throw a wrench into things.
Big time. So they're playing it safe for now.
So what are the scenarios we should be thinking about? What's the most likely outcome here?
Well, the most likely scenario, the MAS holds steady. They maintain their current stance. But if inflation chills out and the global economy starts looking better, they could start easing from April 2025 onwards.
So there's still a chance for easing, but later down the line.
Right. Some analysts are putting the probability of easing at around 35%.
35%?
Not bad odds. Yeah, but here's the thing. We also got to remember that markets can be unpredictable. There's always a chance of something completely unexpected happening. That's what keeps things exciting.
True. You never know what's around the corner.
Yeah.
All right, so to recap, we've got UOB potentially heading in a new direction with their leadership change, CLI going all in on the Australian property market, and the MAS tapping the brakes, for now at least.
A lot of moving parts.
It always is. The Singapore market, never a dull moment. All right, that's all for today's deep dive. Stay informed, keep up with your own research, and be ready for whatever comes next in the always exciting world of Singapore finance. See you next time.
See ya.